Breaking news: U.S. jobs surge and the Fed's interest rate dilemma trumps economic influence. June's employment figures exceeded forecasts, illustrating a robust U.S. labor market that reduces the chances of the Federal Reserve lowering interest rates in the near future. According to the Labor Department on Thursday, the economy added 147,000 new jobs in June, surpassing the 110,000 jobs anticipated by economists. The unemployment rate fell slightly to 4.1%, down from 4.2% in May. Healthcare continued to contribute significantly to job creation, maintaining its strength across various economic conditions. On the government front, state and local hiring increased, compensating for a loss of 7,000 positions in federal jobs. Overall government employment grew by 73,000 positions. Revisions to previous month's data reflected better than expected hiring trends. Job additions for April and May were revised upward, totaling an extra 16,000 jobs. White House Press Secretary Carolyn Leavitt highlighted the strong job figures, celebrating the creation of nearly 150,000 new jobs, the fourth consecutive month of surpassing expectations. American-born workers have driven all job gains since President Trump assumed office, and wages continue to rise. The economy is thriving, and it will only improve following the implementation of the One Big Beautiful Bill, she stated on social media platform X. An assertive stance on undocumented migrants has shifted the employment trajectory, contributing to a decline in employment among foreign-born workers and a surge in native-born American employment. From February to June, domestic employment rose by 2.1 million, compared to a reduction of over 500,000 in foreign-born employment, a shift not observed since the early phase of Barack Obama's presidency. The stock market responded enthusiastically, with the Dow Jones Industrial Average rising by 344 points, approaching its peak levels. Both the S&P 500 and the Nasdaq recorded new all-time highs. The report's unexpected strength could shape the Federal Reserve's interest rate decisions. Many thought a rate cut could happen in July, but the new data might put such plans on hold. Chris Zaccarelli, Chief Investment Officer for Northwhite Asset Management, remarked, quote, "This strong jobs report, especially following yesterday's disappointing ADP employment report, suggests the Fed is unlikely to cut rates anytime soon." Trump, who has shown criticism towards Federal Reserve Chair Jerome Powell, believes interest rates should be lowered to stimulate the economy further. With rapid deregulation, domestic energy initiatives, and the pro-growth provisions of the One Big Beautiful Bill, President Trump is driving American economic resurgence, stated White House spokesperson Kush Desai. While the Federal Reserve has not issued comments, investor interest is likely to shift to corporate earnings as the next earnings season begins around July 15th. Nonetheless, caution is warranted as market valuations remain high, with price-to-earnings ratios around 22 times earnings, well above the 30-year average of 17. What are your thoughts on the current economic policies? Do you think the Fed should cut rates now or wait? Share your views in the comments below.